Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us, the author of the popular book, The Silver Manifesto. He also has The Morgan Report, and I'm talking about the one and only David Morgan. David Morgan, thank you for joining us today on USAWatchdog.com.
Greg, always a pleasure. Thanks for having me.
Well, we had some dreadful figures come out last week. I got to start with the unemployment report. They were expecting 200,000 jobs. They got 38,000, and if you drill down on that, they were 29-hour a week or low-paying jobs. How's that economy going? Is it really peddling fiction if you're saying the economy's not doing well?
I think the only one peddling fiction are the people saying that they're peddling fiction. I just want to review some of the top tier people that are world renowned and what they have to say about the economy, Greg. We did a little pre-interview a week ago when you said I'd be back on your show. So just briefly, Japan's Prime Minister Abe at the G7 meeting. This is from ABC News. This isn't, an internet truther. Japan urges G7 to avert another economic crisis. Prime Minister Shinzo Abe urged fellow leaders of the Group of Seven advanced economies to avert another global crisis by acting to rescue the faltering global recovery. And of course, that begs the question, which we'll go into later, about, what are they doing, and kind of know what they're doing isn't working. Now let's go to the famous, the one and the only Dr. Alan Greenspan, who was on Fox Business with Neil Cavuto. And during that interview, Greenspan told Cavuto, the U.S., quote, has a global problem of a shortage in productive growth, and it's headed for a state of disaster. Quote, what the Fed does at this particular stage is less important than what the markets are doing. And what the markets are beginning to show us is an acceleration in money supply for the first time in a very long time. We have a global problem of a shortage in productivity growth, and it's not only the United States, but it's pretty much around the world, and it's being caused by the fact that the populations everywhere in the Western world, for example, are aging, and we are not committing enough of our resources to fund that, end quote. One of my favorites, and I think one of the most respected on both sides of the aisle, so to speak. I think he's neutral politically, at least in my opinion. That would be Bill Gross, former bond king of PIMCO, and I have a personal story on that. I did another interview. I don't have time for that today, but Business Insider, Bill Gross. The last 40 years of investing history are, quote unquote, a black swan that won't be repeated. He's basically sounding the alarm that things are going to take a turn for the worse. And you can, look that up on the Business Insider. Personal friend, and someone I've known for years and years, of course, John Embry. And John made a very interesting comment that I'm going to read here in a second about the economy in general, specifically to the 2008 collapse. John said recently that he remains fascinated by the misinformation coming from official sources with respect to the economy. The recent housing numbers were many, many standards of deviation above where they should have been, and a lot of the supposed strength in the sector is primarily attributable to horrible lending standards that appear to be repeating in the exact same process that preceded the 2000, 2007, 2008 collapse. In other words, they're doing the subprime thing all over again. And lastly, David Stockman worked under Reagan, as you know, and you've interviewed him. And this one resonates with me more than any of the others because of how it's all encompassing. But David Stockman, the United States is broke, fiscally, morally, intellectually. And the Fed has incited a global currency war. Japan just signed up. The Brazilians and Chinese are angry, and the German-dominated Eurozone is crumbling. That will soon be overwhelmed. When the latest bubble pops, there will be nothing to stop the collapse. If this sounds like advice to get out of the markets and hide out in cash, it is. In 1985, the top 5% of the households, the wealthiest 5%, had a net worth of $8 trillion, which is a lot. Today, after several bubble and after serial bubbles, the top 5% have a net worth of $40 trillion. The top 5% have gained more wealth than the whole human race has created before 1980. So that's it. I'm going to leave it there. But what I wanted to do was outline that this is not just, people like me that are known in a, let's say, a subset outside the mainstream press. These are mainstream press people at the top levels, and they're warning again and again what's really going on.
Well, if you take a look at Alan Greenspan, I mean, the problem isn't central banks. The problem, I think Jeff Berwick wrote an article about this. It was great stuff. It was really, I read it and I went, oh, he's deflecting a blame off on from the central bankers off onto the, oh, we don't have enough growth. I mean, this is caused by central bankers, and Greenspan knows it. He was the one that led the charge back in the early mid 2000s, early and late 1998, right? I mean, this is a central bank driven serial bubble blowing machine, is it not?
It is, and just a couple comments on Greenspan. It's very difficult to get a handle on Dr. Alan Green expand. The whole time I was writing the Morgan Report and during his tenure, I always referred to him as Dr. Alan Green expand because he's expanded the money supply at such a rapid rate. He knows better. He wrote one of the best treatises on gold and why it's important than just about anyone. And it's often referred to. And yet you get people like that have written books. I can't remember Larry's last name out of New York. He wrote a book on basically decoding Alan Greenspan. He's an enigma. He's hard to figure out if secondhand, but I believe it, and you don't have to. It's hearsay that one of our associates asked him directly, would he change, has he changed his view on gold? He says, I wouldn't change a word. So it's very difficult to figure out. I mean, he's made the excuse that in his position as head of the Fed, he had to do what he did. Well, did he? I don't know. But he did. That's obvious. And now to go, the step that you're taking, I agree with you. I mean, basically trying to name, shame, and blame others for what's a centrally bank caused problem. I mean, to increase the money supply without a commensurate increase in productivity is suicide. And it's a long-term suicide problem until it's not, which is right now. I mean, we are in a predicament that Abe says, well, let's do something. Let's avert a faltering global recovery. Well, they've been doing whatever they can, which is print more, and it hasn't averted any problem at all. It's only made it worse. And they all know it, but they don't know what else to do. There isn't really much else you can do under the Keynesian model. The only thing you can really do is admit the truth that there is drastic distortions in the global economy and let the market take care of it. But none of these people want to let the market take care of it. They want to control it.
Well, they don't want to take, as you said, as you pointed out, the top 5% have 40 trillion. They don't want to take a hit. They want all their money.
Right.
That's the deal. I mean, and when all these people are making these warnings about, and these are big people, to your point, I'm glad you started off that way, because these are big, these are prime ministers, these are top fund managers, top money managers, the bond king, and they're all saying these things. Why do you think they're coming out with the warnings now? And they're dire. Why do you think the dire warnings now?
Well, a couple of things. One is that they see it as rather imminent, but what does that mean? I thought personally, my take is, within a couple of years. I think they want to be on record, for their own conscience. I don't know Bill Gross.
You think it's a couple of years away, or do you think it could be closer?
Oh, it could be this year. I mean, there's, if you get really deep down a rabbit hole and I go there, I don't voice it in the public very often, but there's a woman's website that I watch all the time. And there were 12 people from, I think, about the 1775 and 1875 time frame that 12 different prophets that talked about 2016 being the year. And then if you go back into Jonathan Cahn's work with the Shemitah, and of course Jeff Berwick has taken a big put his arms around that, both arms around it, and the Shemitah and the debt jubilee. There's a lot of things. So could it be this year? Absolutely. In fact, I've been right and wrong. I mean, I'm right about the overall deterioration of the economy and the money supply and the inability to directly address the problem. Where you pinpoint it, that's more difficult. I said 2015 would be the year that most sleepy Americans would wake up and say the economy really isn't recovering. I would move that more to 2016. I think this will be a seminal year. I don't know if this is going to be the year where things really fly apart, but it certainly could be. And there are many I'll say again, prophets that have forecast it would be 2016.
I think Bill Gross is forecasting that there needs to be a debt jubilee. Wasn't that Bill Gross? One of them saying that we have to write off this debt. I mean, they're not going to pay off the debt, and they surely don't want it to default. So wouldn't they want to try to control it with a actual write down, as opposed to the people just saying, "Well, bonds are no good. Sorry." And wouldn't they want to try to do that?
Well, I believe so. I mean, it's a very easy philosophical and moral argument. The thing to do in the best case for the population at large is to admit the truth and say we can't pay it back. And then you have a default, which, the fancy word is jubilee, and you say, you're going to get 10 cents on the dollar or 15 cents on the dollar or zero on the dollar. And then what happens is all that misallocation of capital, everything that's overpriced gets repriced by the market rather than by the controllers. And then you start afresh, because what you have is you have trust and truth in the system that's preserved, because they admit that they have overspent. They admit they can't pay it back, and they default, and they'll let the chips fall where they may, especially if there's very little intervention. So that rebuilds capital markets. That's the truthful, easiest way to do it, and morally very correct, but also very painful. The other way is to never admit the truth and hyperinflate the currency.
That's what
Now,
we
when
got
you
right
do
now.
that, you also get a debt default, but you default on the currency, which is morally more harmful because it's very difficult to rebuild the capital markets at that point, because you lose all trust in the system. So morally, you gain trust by saying the truth, which is we can't pay this debt back. We're going to pay you back what we can and start over, i.e. a debt jubilee, if you want to refer to it in that terminology. Or the other way is to say, oh, no, we got it under control. We know what to do. And then again, going back to Abe, we've got to act to rescue the faltering global recovery. Well, come on, guys. You've been trying this forever in Japan, and it hasn't worked. Get a clue. If you keep doing the same thing and it doesn't work, that's the definition of insanity. The whole thing is run on insanity, excuse me, as I rant. So you come back and you continue on this insane methodology of printing more and think you're going to print wealth, think you're going to print your way out of it. It won't work. And more importantly, it takes care of the entire system, because you lose the ability to keep the moral integrity in the financial markets, because people don't trust the currency. They don't trust the markets at all. So it's very difficult to rebuild after a hyperinflation. And that's usually what takes place, is a very, very strong personality, such as what happened after the Weimar Republic with Adolf Hitler, that says, oh, don't worry, boys and girls, I'm your daddy, and I'm going to tell you exactly what to do. You have no vote, you have no rights, you have no say. It's going to go like this. And that, of course, may be part of the plan, Greg. I don't know. I'm not at that level, but certainly I'm a fairly deep thinker and I've studied monetary history. But unfortunately, what I just said is usually what takes place, and probably the most probable outlook. Unfortunately, if we had some real people out there besides some of these that I just named, that I respect, and some that I mentioned I don't, regardless of my opinion, the truthful thing to do is to admit the truth and let the markets take care of the vast overexpansion of these bubbles throughout the economic system globally. But I doubt it will happen.
I wanted to bring up the fact that we had this 38,000. I started out with this 38,000 jobs number, and the reason why I'm bringing it up again now, it's dreadful. And we've been told for years we're going to grow our way out of it. And, all we've grown is a huge debt. We've grown things absolutely unbelievable. We're not growing our way out of it. It's declining. The markets are clearly, on any metric you'd like to look at, are declining, not the phony unemployment 4.7% numbers. And if you look at the real numbers, the workforce participation rate, I mean, it's what, 90, almost 300,000 from 95 million. And so I wanted to bring up this about the U.S. debt clock. And people have been bringing this up to me that, the debt clock is showing that, gold is at, something like $7,000 and silver's is like $700 on the spinning debt clock. What do you make of them all of a sudden in the last, 3 or 4 or 5 months, putting up a dollar price of gold and silver that is exponential? What do you make of that?
Well, first of all, the fact, and that is that it exists. Anyone can go to the usdebtclock.org and look at it themselves. So that's factual. What I'm going to say now is opinion. First of all, what it is I think it's what, $812 silver
Yeah.
and 7,300 something gold. And what that is it's the year over year increase in the M2 money supply divided by the yearly production of silver in ounces. Or you could say it's the year over year increase in M2 money supply divided
Ah.
by the yearly production of gold in ounces. So it's a dollar per ounce, which is what you get. It's an arithmetic problem, dollars per ounce. And so if you do the arithmetic in silver, it's $812 an ounce. If you do it in gold, it's 7,300 per ounce. So that's what it is. As far as why are they putting it up there, this is my opinion. One is I don't know, and I'll stab at it, but I think it could be some kind of psychology that um, maybe the idea is to get it out there in the public in a manner that few are awake and aware. And it's obviously showing that the gold silver ratio is out of whack based on the metrics I just named.
In other words, sorry to interrupt you here. In other words, you're saying to put the idea out there that, well, hey, boys and girls, gold and silver is way undervalued relative to how many dollars we're producing and how many ounces of gold and or silver we're producing. So it's way out of whack, for boys and girls. Is that the idea they're trying to put out?
That's the factual part of it. Why are they doing it? It gets to intent. We don't know what their intent is, but we know what the facts are. They're just giving you math. I mean, it's very simple math. I mean, if you look at Rickard's new book, I mean, he does the math in the book. So, I've done it. I did it. I was one of the first in engineering the price of gold. If you look up that article I wrote in like 2002, it does the same thing. But this is important, and why, again, we don't know. But I suspect it's to put it in your face without putting it in your face. In other words, shows like yours will start bringing it up, and more people will look at it. And then, let's say, the more sleepy public that are awakening will say, "Oh my goodness, look at that! Look at the ratio." It's kind of that 9-to-1 natural ratio that we're at right now, where silver is very undervalued, even relative to gold.
If according to the debt clock. If you
Yes.
according to that debt clock, they're both way undervalued. I mean,
They're both way undervalued. I'm just pointing out that one versus the other. It's the whole thing about the silver gold ratio. Some people say it's absolutely meaningless. It's meaningful because it tells you which is performing better relative to the other one. If the ratio is narrowing, meaning the number's getting smaller, it means silver's outperforming gold. If it's widening, it means gold's outperforming silver. That's what it means. That's a fact.
And this is just a simple, here's the silver production, here's how many ounces we produced, and here's the dollar production, here's how many dollars we produced in bonds and actual currency. And, it's it's $800 something to an ounce of silver. So how many, we created $800 for every ounce of silver is what it says. We created, $7,300 for every ounce of gold is what that debt org silver gold clock spinning like a fan is showing us. Is that right?
That's correct. Yes.
And if you back up, one other thing I wanted to bring up too is that Jim Rickards, when you see, he thinks calling for $10,000 gold, and people are like, 10,000, what? It's only $1,200 right now. And then this just is the math problem that backs up that math, and I think that might even Jim Rickards says it could be way higher. But there's a good case to make for $10,000 gold. I can't imagine with his.
I want to stop you there, Greg, for a second. Sorry for the interruption.
No, you go. I'm interviewing you, my friend.
If you look back, if you could Google, if you want to read the article, and if you want to read the article, Google "Engineering the Price of Gold," David Morgan. And what I said in that article is, if you do the math, it came out in 1980, $400 gold, and yet we all know that January 21st, 1980, it went to $850. And in the article, what I suggested in a market, you usually go from undervalued to fair value to overvalued. So fair value to cover the currency supply in 1980 was $400 the ounce, but it went to over double that. So in that article, what I said was that it overwent the fair value by a factor of 2. And the reason I interrupted you to say that is because it adds on to what you were saying, which is that, 7,000 is, just by the pure math, it could go higher than that. And the answer is, last time it went double. This time it could go triple, because it's a global phenomenon. This is the first time in recorded history where it's not a country-only problem or an area-only problem. This is a global problem. And because it's a global problem, it will be global currency seeking safety into the precious metals. It will probably, in my strong opinion, go into the financial record books.
And just so you wanted to get back with it, we had this in the pre-interview about Jim Rickards, and Listen, some people say it's a CIA shill and whatever, but he's smart enough for the government to bring him in to say, hey, we're going to play some financial war games and you're going to play China. I mean, so he's a bright guy, and I can't imagine he's going to blurt out, "Wow, gold's going to be $10,000," and then go hang out with his friends and have them snicker and laugh at him. I don't see that happening with a guy like Jim Rickards.
Well,
Do you? I mean, it just tells me that that's a common knowledge, and to me, $10,000 gold is pretty acceptable number around the upper echelon. This is a guy that rubs shoulders with billionaires and heads of state, right?
Sure. No, I agree with him on a lot of things. There's a couple areas that I absolutely disagree with him, but on his economic thinking, he's really very, very good. I listened to him in New Orleans at the Gold Show, where I was a speaker myself, and usually I don't take a lot of time to listen to other speakers. But I did listen to his lecture. It was really, really good. And he can take very complex issues and break them down. So, basically, I have a lot of respect for his economic outlook and his views and his connections. Again, I don't agree with everything about him, but I don't agree with anyone on everything anyway. Just on that digression, Deb Casey gave probably one of the best speeches I've ever heard. And I've known Doug for years and years and years. But back on point, I always look at what can you get from learning from others, and certainly learn a lot. I like the way he breaks down things, and his new book is actually less of an academic read than the Currency Wars and I forget the name of the other book, which are a little bit more on the academic side. But it's a book that I think almost everybody should read. The New Case for Gold is a very simple read. It doesn't take long, and it's a very good, well outlined, well structured, and well written book.
Well, I wanted to bring up another point too. People talk about the inflation rate and how many dollars are produced and all this. And if one of the things that Manarino, a good friend of mine who was a guest on the show, and he says, watch the bond market. If you want to see what's going on, watch the bond market. It's orders of magnitude bigger than the stock market. And my thing when I look at the bond market, I think, well, all these things are assets. Well, what happens if these assets turn into a Puerto Rican bonds? Is it really an asset or is it a liability? And then you look at gold and I think, is gold going to be the new asset? Is everybody going to be clamoring for gold? And at what price would that asset have to back up the currency is really what it comes down to. How many dollars would it take to back up, the other assets it's replacing? So, I mean, the bonds are not going to be repayable. And when you talk about, you said about, we should be honest and have a jubilee and just cut all the debt, then what asset are we going to replace those? Because nobody's going to take a bond. After you tell somebody you get 10 cents on the dollar for your bonds that you've been saving, nobody's going to take that. Interest rates are going to skyrocket. And then what asset are they going to go to? Farmland, diamonds, pearls, gold, silver? What do you think about that premise?
Well, what I think is that the market will reprice everything. So, real wealth is what exists that we can physically touch. I mean, you can talk about gold and silver, but that's a really small subset because that's, physical money. But if you look at, as you said, farmland, skyscrapers, all the real estate, all the roads, all the minerals in the ground, the oil, everything else, that's a real wealth. And what you do in a bond collapse is you reprice everything. So it's not like all the wealth goes away. It's all in place the next day. And a financial collapse, what takes place is a repricing mechanism. So some of those bonds might be priced higher. It's possible, but then some will be repriced. Like, let's say a bond on the fracking industry.
Most will be repriced lower. Come on.
Almost all will be repriced lower. Absolutely. I'm not trying to, be funny here, Greg. I'm just pointing out that that's what will happen. You ask me a question, I'll answer it directly. But yeah, there'll be a huge contraction of what the value in price is, but the actual wealth doesn't go away. In other words, a restaurant that's priced at, let's say, $2 million today might be repriced at $200,000, but that restaurant is still the same restaurant. Now, who's going to own it? Well, the person that maybe had that thing with 3 mortgages on it, the owner, quote unquote, now that really is owned by the bank, can't own it anymore because they can't service the debt, even when it's readjusted. But someone that's sitting on the sidelines when their gold is repriced to $8,000 an ounce might come in and say, you know what, you, Mr. Bank, want $200,000 for it. I'm going to offer you $100,000 in gold, and you're the new owner of that restaurant. I mean, you can just go quirky, but I just want to give a solid example. I'm not arguing with you, Greg. What I'm trying to do is educate everybody, at least get them to think. You don't even have to agree with me.
So wait, let me get this straight. So you think that, and I just want to get this point because I think it's a great point. You're saying that the wealth is going to be there. Real wealth, and I think this is what I heard you say. Real wealth is going to be repriced, and generally speaking, higher in dollar terms.
No, I'm saying it'll be repriced. The market will determine price. It'll be repriced in dollars at a new price. And in most cases, I think it'll be lower than if interest rates go high, then bond prices go lower, which means that's a huge deflationary force on the whole economy. And you could hyperinflate where the prices go higher, where you renege on the currency, or as we talked about earlier on the show, if you actually admitted the truth and let the bond market work its way through without any government interference, which is highly unlikely. It's a pipe dream. But if that were to occur, then what you have is you'd have a debt repricing in the marketplace. And you would say, what is the true value of this? And a market would determine that. In most cases, it'd be far lower. In other words, there's more dollars chasing goods than there are, that the price is really high in dollar terms. I mean, it's the argument about there's not enough gold to be money. That's preposterous. There's enough gold to be money on a worldwide basis. It's just what price. If a dime buys a gallon of gasoline, then a dime could always buy a gallon of gasoline, a dime of silver I'm talking about, not a slug. But the point is that it would be repriced in most cases far lower. I mean, first of all, let's just look at real estate briefly. I mean, if you buy a house for $250,000, but the yield on it only is $1,200 a month, which is what you can rent it for, I mean, that's actually a stupid investment. You want to look at a real estate investment for return on capital. So you want to get, 8-10%. If you buy a house for $250,000, you want to get like $25,000 a year out of it. That's what you want. That's a 10% yield. And then there's maintenance and taxes and things you got to subtract from that. But that's an investment. That's logic. That means you're getting return on capital. But people now say, oh, the housing only goes up, real estate only goes up, so you pay $250 and you rent it for half that, so you're losing $12,500 every year. And they say, oh, this is wonderful because the price will go up. This is pure rank speculation, people not know what the hell they're doing. That's what that is. But very few people can stand up and say that. I mean, I forecast the housing crisis well before it happened. I'm certainly not known for that. I'm not on CNBC saying that, but nonetheless, I said it. In fact, I got a very nice email from a gentleman that was heavily invested in the real estate market, took my public article and thanked me, and re-thanked me because he got out in 2007.
Yeah, I was on CNN, and I did say it on CNN that the subprime would not be contained. I think I actually said Bush was a liar. Oops. I think I said they're lying. They're lying that the economy's not good and all that. Of course, I ended up with USA Watchdog, right? I didn't have my contract renewed, which is the best thing that ever happened to me. And I got USA Watchdog, which I like because I don't have to worry about what I say or, oops, somebody says something terrible. And we don't cuss or anything like that. But I can put real people on with real opinions, like you. And I want to finally wrap this up with one of the things that has struck me, and I want to get your comments on this, is that I just talked to Charles Nenner, who's out, and he's saying that he's saying that the crash is we're going to crash into the fall, but the real crash is going to be in 2017. I don't know if he's going to be right or not, but there's not a single person I talk to. Not a single one says, oh, no, we're going to fix this. Everything's okay. We're not going to have a crash. Nobody. And you started off the interview with all these people and all these, I mean, you could just get one expert after another, big money managers, Gundlach and, Bill Gross and Greenspan. And there's not a single person out there that doesn't say, oh, no, we're going to have a crash. A crash is coming. Judgment Day is coming. Some sort of crash. What does that tell you about the psyche of the top echelon of the people when they basically all agree? We're only talking about timing here. Basically all agree that the crash is inevitable.
Well, I think what it means to me, again, opinion, is that there's infighting at the top. The central banks really don't know what to do, and they're starting to get agitated at the top of the pyramid. And of course, there's an argument that they're all in bed together and, they're just playing a role. But that isn't normally human nature. In fact, as things start to deteriorate more and more, it's what I refer to as the financial survival instinct. I think what Andy Hoffman, or maybe it's Trude Ferguson, or both, talk about economic mother nature. I think Bill Holter may refer to it as well, but I'll go along with that. There's a instinctive ability of the human species to preserve what they have, and it's fear-based. It's survival instinct. It's part of the root base of the reptilian brain, if you will. The point I'm making is that this is a very clear sign to me from my studies and my work that there is infighting at the top. And these people know what they're doing isn't working. So there may be some really interesting discussions going on behind closed doors about what they really can do. And the answer is they really can't do much. What they really have to do is throw in the towel and let the markets take over. But that's not what will happen.
At some point, that no matter what they do, we get. It appears to me that all the voices are saying at some point, it's just a matter of timing, we get a crash, no matter what.
Yeah. And we'll have a huge readjustment in our lifestyles. It'll be, in my view, I mean, you asked me early, to think about what, we wanted to discuss on your show. And, I look at it as, and this is again opinion, that it'll be sort of a sci-fi movie. I mean, you may go in with the iPhone 9, and it drives your car there automatically or something. And you get into the grocery store, but you used to be able to buy grapes, any time of the year. I mean, here in Washington State, the great Northwest, I mean, can you imagine I can buy, like 3 varieties of grapes in the middle of winter? And I can do that because they ship up from South America. Well, those days are probably going to go away. So you're going to have different choices, let's say, in a food supply, but you might have more technology. And this is the great wish for the power elite. I mean, what they're really moving toward is technocracy, where the technological evolution is what is going to replace the current system. And this was proposed in the 30s, actually. And there is some merit to that. In fact, I addressed it in the Silver Manifesto in the last chapter, Beyond Silver, because I've always been a rather deep thinker, excuse the ego, but it's true. It's my nature. That's who I am. And so I've always kind of looked out ahead. And so the question is, as you've asked, where do we go from here and what does it look like? The answer is it's going to be very interesting. And of course, this all presupposes that the electronic form of interchange continues. And not saying it won't. In fact, the greatest probability is that it will, do away with cash, make everything electronic. And the one thing that they fear the most is the one area I'm exploring the deepest, which is financial technology, where there's peer-to-peer payment outside the banking system, which is what Bitcoin's all about. Of course, there'll be a subset of that or others that are competitive and maybe even usurp Bitcoin. I don't know. What I do know is that there will be, in the vestige of a free market that always exists, a counterparty assessment that will take on the banks in, let's say, a very small way that allows people to escape the current system. And that's why financial technology is so important. And again, that's why I'm delving into it deeply, but one step at a time, and I'm taking my subscribers along with me, because this is an area that I think may prove the real market as the system collapses further.
And with the system collapsing, what are you doing? What should people do to protect themselves? I get this question all the time, and I ask people, what are you doing to protect yourself? What are you telling your subscribers to protect themselves? I mean, the obvious is food and water, because if the day that your EBT card doesn't work, the day your credit card doesn't work, the day your ATM card doesn't work, it's going to be pandemonium in the street, right? What are you telling your people to do to protect themselves in the coming crash?
Right. I mean, the food and water is, obvious. And if you don't have any ability to go beyond that, then certainly start there and forget about financial protection. If you're the next level up, then you want financial protection. The way you do that is you get outside the matrix, which means you have something physical that's been money for thousands of years, which obviously implies gold and silver. And if gold
and forget about the prices, forget about the dollar price, just have the ounces.
Ounces. If you have more,
it's not a trade. It's a position. It's a core position.
I don't want to get anyone upset because I do both. Very few do, but my core position is always at least 75%, at least, if not 80 or 90. I just trade with a little bit. But in those trades, if I'm very profitable and have been at times, you can take those. You can beat the bankers, and you can take those paper profits and guess what? Buy more physical with it. So I'm not advocating trading for everyone. I'm just saying that's part of the service that I give to our premium subscribers. But nonetheless, no, you just ask yourself if you have more ounces this year than last year, and if you do, you're wealthier. I don't care what the price is.
Do you think the dollar is going to be strengthening here if the rest of the world gets into trouble before us? Do you think the dollar strengthens and we could take a hit on gold and silver prices?
Yes. Yeah, if you look at the debt pyramid, first of all, the most stable structure known to man is a pyramid. And that implies that the most unstable would be an upside down pyramid, which is exactly how the debt based monetary system is structured. It's an upside down pyramid. If you look at John Exter's work, and I've written about this extensively, and others have picked up on it, Trace Mayer, for example, runtogold.com, I think is his website. And you can just type in John Exter upside down pyramid into Google. I'm sure you'll see a lot of articles. But basically, when people get fearful, they go to what they trust the most. You got to remember all these currency failures that are outlined in the book, The Silver Manifesto, and there's a ton of them in the book outlined what happened between 1981 or 1980 and 1991, and then 1991 to 2000. I mean, there's a ton of countries that had failed currencies. It's just never on the mainstream news. But the reason that they were okay, so to speak, I mean, they were in dire straits in a way, but the reason they didn't go even worse is because they had a U.S. physical greenback that they used. So the U.S. dollar physical greenback is used as the monetary instrument of last resort all over the world. And because of that fact, you're going to see a run to that. That will be the last run before it goes. So sure, you will see actually an increase in want for U.S. dollars in a physical manner before you see the run to gold start. But once the run to gold starts, once the collapse or the psychology changes from, geez, it is just a piece of paper and it's really not worth the paper it's printed on. Once you get that psychology, then the run to gold will start and it won't be stopped. I mean, as I've said many times, and it bears repeating, there's no fever like gold fever. And once it again starts, you can't turn it back. It's like jumping off a cliff. You can't get back on.
David Morgan, his book, which I'll link to all this stuff. You folks on YouTube, if you go up to the right through, there'll be a link back to USA Watchdog. Go to the after the interview section. I'll put on a link to your Silver Manifesto, which is a page on your site, the Morgan Report. Of course, the homepage of the Morgan Report. Also, your subscription page. What does it cost for a subscription to the Morgan Report?
It's $500 a year, which is relatively cheap relative to what we put out. I mean, I'm one of the few that does just not only the commodity side, but the equity side as well. And we do timing, and there's a lot. You can watch the video. It's about 4 minutes. It tells you everything.
Okay, and I'll put a link to that as well. David Morgan, coming to us from the West Coast. Thank you so much for joining us today on USAWatchdog.com.
Greg, always a pleasure, and thank you again.